Good morning, everyone, and welcome to the midweek update as of Wednesday, October the 2nd. We are seeing a pullback in the market the last week, last couple of days here. We're seeing a pullback. We're starting to see stocks consolidating. We're starting to see which ones are the stocks that are separating the wheat from the chaff, so to speak. We'll take a look at those. We'll take a look at the ones that I've been in and have been monitoring, some of the ones that you might want to take a look at too. We'll also take a look at the ones that you that are here with us live are looking at and would like to discuss. So go ahead and type into the chat, type in the tickers that you'd like to discuss, type in the charts that you'd like to see. Type that all into the chat now. I'll go through it later in the broadcast, and we'll go through that. We'll go through all of your questions. So go ahead, type in the chat now, get all that stuff ready, so that way later on when we do have the Q&A, we are set and ready to go. Without further ado, let's hop into the charts. So I want to start off here with the major indexes. And I mentioned at the moment ago that we've been pulling back the last couple of days. The market, before pulling back, I think that it's important to note that the market ran for about a 10% move. If we take a look at where it was back here in early September, prices ran about 10% on the NASDAQ and then started to pull back about a week ago and pulled back. So far, the pullback's pretty light, right? It's only about 3% so far. But we've seen some stocks that have started to pull back. And so the way that I like to take a look at where we're at right now and how it affects me personally, right? The way that it affects me personally is not just the stocks in my portfolio, but also the stocks that I'm interested in. And I think that this is a key for all of you that are here watching this. We could take a look at what the indexes are doing, but what are the stocks that you're interested in? What are they doing? So I track a universe list of stocks, and the way that I have this universe list, and we just posted a brand new video within our Discord group, and we're having a whole study session on building universe lists. Is first, I want to screen for all the stuff that I'm interested in. Personally, I'm interested in CAN SLIM criteria. Yes, I filtered it down a little bit more into what I call EAGLE. It's a easier acronym, I think, but basically looking for earnings and sales and projections to be off the charts. We want to aim for high probability, high reward, low risk setups. We want stocks that are game changers. We want stocks that are leaders, and we want stocks that are moving with the market. And that's basically what Eagle is. So all the stocks that are on this universe list here, on this heat map, they've all fit that criteria. Then, so you run screens for that. Plus, you also might have a couple of stocks that you want to keep on your radar that don't necessarily pass your screens. Put that stuff in there. That's perfectly fine. But you do want to think ahead of what stocks do you actively want to track? How does it get onto your list? And also think about what it takes to get kicked off the list. So that way it's not just, robotically running screens, mindlessly doing it, and then maybe you don't pay attention to some of the nuances here. Well, some of the stuff that I'm seeing just from this heat map, you see fairly close to an even number of pink and blue, right? That's positive and negative. Part of what I'm seeing too is that you you have a slightly more concentrated blue section on the right side and down than you do on the left side and up. Would you agree with that? So what's down here? Well, we've got some financials down here. We have some biotech over here. We have some consumer discretionary on the side. So those things are some of the stuff that's consolidating, some of the stuff that might be getting ready to set up in the weeks to come. So, what else do we look at aside from just looking at the whole universe, things that are passing our screens and stuff like that? We want to take a look at the stocks that are setting up. So, I keep another watch list and I go into the stocks that have set up and monitoring what they've done throughout the course of the week. These are those, right? And so, well, what do we got here? We've got some heavy duty pink in there. We also have some heavy duty blue in there too. And part of what that tells me is that we're in this transitional phase where, yeah, well, we're like we said at the top of this, separating the wheat from the chaff. So, how do we know which one is the wheat, which one is the chaff, right? So this is how we're taking this big universe and we're narrowing it down, finding the best stuff. So the way that I like to do that is by actually going in and taking a look at, well, what's the performance? What's the performance? And take a look at the chart because the chart's going to tell us quite a bit in a hurry, right? So let's go to here's the focus list as of right now, post focus list. Here's some of the names that are on it, right? So VERX getting close to former highs. EOL, EOLS getting close to former highs, right? That was a pullback. Here's another one that's getting close to the former highs, getting ready to break out. And as we go down the line, you'll be able to see those that are breaking out. Some of them are breaking out already. Some of them are leading. Here's SFM. This is one that we have a position in already. This one broke out and it's pushing towards new highs again today. So you get the idea, right? Yeah, you have your list, you go through it, you start to see which ones are setting up, and not just if they're setting up, but how they're performing and how the market is treating those names. And that's going to give us a great pulse on the market. It's something that's going to be able to tell us should we be stepping on the gas, hitting the brake, somewhere in between? Should we be getting heavier or lighter? At the present time, I'm moderate. I'm moderate. I'm not overly heavy. I'm not very light either. Here is TradingView again. And I'll just put on all the different uh, color codes that we've had over the past however long this chart goes back. Well, we've got all the different color coding on here. And so you can see that sometimes it's been a red condition, sometimes it's been yellow, sometimes it's been green. For the last uh, couple of weeks, it's been a green condition. And then as of yesterday, we switched back to yellow. So what does that mean? That means that there's been things that have been saying take a little bit risk off. If putting new trades on, wait, be a little bit more cautious here. Go in with a standard size instead of the green condition where you're going in very heavily. We've seen some chop the last week. So scaling back a bit has been good advice. Here are some of the stocks that I happen to be in right now. I'm still in Duolingo. Duolingo, I've been in since back here. And by the way, these are all uh, stocks, ideas that get shared with our research program and with people in our group coaching program. So if you're interested in taking a free 2-week trial to the research program, here's the link. Here's the link to that. You could go check out that program. But all this stuff gets given out beforehand. All the trade management gets given out beforehand too, so that way you could follow along. So you're getting updates every day of, okay, here's how the market responded. Here's what I plan to do tomorrow, and you get that the evening before. So it makes it very easy, especially if you're somebody that works full time and you're doing trading on the side. So Duolingo pulled back to the 5-day exponential moving average. It's reversed. It's close it. Well, at least at this juncture, right? It's in the upper half of its range. We'll see where it closes today, but it's formed this. It's actually getting ready to form an add-on buy. If it sticks in the pattern that it's in right now, I would actually be the look. I'll look to start to add to this if it could break out to new highs. You see how it's tightening up over here, right? It's almost formed this bit of a pennant. If you go down, and this is something that I like to do too, I'll go down to a 30-minute time frame, not to try to trade intraday, but to just have a better look at the pattern. So what I'm seeing here is that just from this point of the chart right here, right? And let's zoom in a little bit. So from over here to over here, you see this narrowing of the price action, right? So the price is getting compressed, volatility is contracting, but that whole VCP thing that my friend Mark Minervini talks about, it works on all time frames. So if you see it volatility contracting on the higher time frames, the weekly time frames, the daily time frames, take a look at the intraday time frames too, because sometimes you could get even tighter risk, and then when price breaks out, you're able to get in with even smaller risk, and that's the name of the game. That's how you're able to compound very, very quickly. So Duolingo looks like it's tightening up here. Could be ready for a move very soon. Palantir, this one recently hit a scale out for me. I sold a little bit on weakness right back here when it did that reversal. It's been consolidating sideways since. And now what I've done is I've raised my stop to just under the last couple of days of lows here, and I'm waiting for a breakout. So I'll either be adding if price breaks into or not into new highs, but breaks above the recent highs of this week, or I'll be looking to cash out if price falls below the recent lows. Either way, this trade is a win, and that's where we want to put ourselves. We want to put ourselves where we take our initial risk off the table fairly quickly, and we allow the rest of it to be able to compound. That's how we're able to consistently make money. It's how we're able to smooth out our equity curves. It's frankly how we're able to beat the market. So that's why I operate in the way that I operate. Here is SFM. This one just hit a scale out yesterday. Got to where did it get to? It got to 111.40, which was a gain of about a little over 6.5%. My stop set already at break even on this one. And the next place I'm looking to take a scale out is 117.40. That's about 12.25% gain. The reason why I like to take gains at certain mile markers, a lot of it has to do with the reward to risk ratio. So on this trade, for example, I started out by risking just 3.5%. Right? That was the distance between my entry and my stop. So once I've made twice that amount or close to it, then I want to start taking something off the table, because now I've got twice my risk. I take something off, I put that in my pocket, and guess what? I've mathematically made my edge. And so I want to continue to allow the rest to make even more gains so that way I can take advantage of it. But at least if I take gains when I've made a multiple of my risk, roughly two times what I've risked, then that means that if I were just playing it like a coin flip, right? If we were just playing it like a coin flip, flip the coin, you win half the time. But if it lands on heads, you win two. If it lands on tails, you lose one. That's the game. Right? So that's why you wanna start taking something off, or at least think about taking something off at around 2 times what you've risked. And I say around because there'll be other factors. There'll be some other factors, like in this case here, right? It wasn't exactly 2 times what I've risked on this one, but I noticed that there was a Fibonacci level very close to this area where I would be making 2 times what I've risked. So, taking that into account, I decided, all right, 111.40, just below the halfway mark to 112. And those little psychological levels, those can play a factor too. So, just some insight into how and where I like to sell into strength. Here's the last trade that I've got on for right now. MHK. Got into this one the other day. So far, it's below the entry price, but it's behaving okay. It hasn't taken off. It hasn't fallen apart yet. So we'll see what happens with this. I have raised my stop. My stop is at 155.40. And the reason why I raised it there is because it puts it below the 21-day exponential moving average and also below this week's low. So let's see what questions we have. All right. Caleb. Caleb says that he would love to get my thoughts on VST and where it might go. Looks to be forming a shelf to me. Caleb says that it's forming a shelf to him. He's in from 93, but wants to see a good add-on spot. So let's take a look at VST. And everybody, I encourage you to go ahead and type into the chat and let me know what stocks you're interested in, just like my friend Caleb here. All right, so VST off to the races here. And let's start with the weekly chart. And Base Finder found this pattern here. I would actually argue that the proper buy point on this would have been right down here. Not just because that's where you get the nice big move, but the way that I'm looking at this isn't this as being the entry point on the weekly anyway. I'm seeing this as an inverted head and shoulders pattern, and I'm seeing that that line right there. I'm seeing that as the neckline. So when price broke out of there, a bunch of stuff lining up to it. You could have gotten in on the break above the descending trend line, or what I like to do is I like to get confirmation on trend line breaks. So I would have probably looked to enter right around here at 88 and change. Now, Caleb has a great entry too. Caleb has an entry at 93. Right? So here's Caleb's entry at 93, and we'll put this in green, and we'll Caleb entered here. All right. So there's Caleb, and he's in from right over there. And let's put that at the top. All right. So we'll sync this across the layout, and let's take a look at the daily time frame. Okay, so Caleb got in right over here when price was breaking above uh, this area back here. Caleb, let me know if that was part of the plan. If that was part of the plan, great. At that point, when price is starting to get above over here, I would one of the things that I would start to think of is where is a good place for a stop? And so, with price moving like this, at this point, I would consider it to be uh, a momentum play, right? Because if price is going to break out, it should go. If price fizzes out a little bit, I wouldn't want to give it a ton of room. So maybe you're able to get in with, I don't know, maybe 4%, 5% risk at most. But at this point, prices up about 35%. So at a 35% gain on this, uh, the way that I would have done it, I would have at least had a couple of scale outs at this point already. I might be at my third scale out on this one and looking for a place to add. Personally, as far as my setup list goes, I don't see a add-on buy in here yet. And I think that it's important for us to have defined setups. Setups that, because if we don't have a definition of what our setups are, then just buy whenever we feel like it, right? And we don't want to do that because if it's just buy and do whatever you want, then that allows emotions to come in. And when you see price moving up and like, oh man, I should have bought down there. That's how those kind of thoughts can come in and they could start to make sense. But if we do have a defined setup list, then we could say, oh, I should have bought there. When those emotions start to come up, you could be like, well, should I have? Well, what does my setup list have? And it's just like, oh, well, you know what? It's actually not setting up yet. So just be happy with what I have and let it continue to run. Now, part of your question from earlier was looks to be forming a shelf. So where is that shelf? Are we talking about this right here? I do see that, right? If I didn't, I wouldn't have drawn that line right there. But one of the things that I look for in a pivot is that I want it to be consolidating for at least 6 days. Over here, we've got 1, 2, 3, 4, arguably 5. This day is a little bit higher than that one. I would still give it, but price is already out and breaking out of this. The reason why that's just one thing that I want to say is because if you start to just look at 2-day pivots or 3-day pivots, then almost anything can become a pivot, and you could end up buying way, 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 way extended. So don't want to do that. We take a look at what price is doing down here on the 30-minute time frame, yeah, you might be able to find a couple of more entries this way if you're looking at an intraday chart. But then you also have to know too that, all right, I found something on the 30-minute chart. This is still just 5 days. How much room should I really give this? How active should I be with this trade? All things that need to be thought out beforehand. Uh, with price breaking out in the way that it did, I'm probably raising a stop to just below this shelf level down here. Um, at least a partial stop, if not a full stop, to around that level. Oh, what is that? That's about your 113.5 level, somewhere in that ballpark. That's what I would be looking to do. Yeah, so you just said that your current stop is at 113. All right, so we're on the same page. Um, if I didn't have if I hadn't sold anything yet, I'd be locking something in, right? Because this is a very good gain. It's looks like it's on the move again, right? Not just by the price action, but also with the stochastics up here. So one of the things that I love to look at are the stochastics, especially when price is moving in my favor, especially when price is breaking out. And price did break out to the fresh 52-week highs today. And what happened? You have this turn in the stochastics going from that blue line there, that's the fast stochastic. The red one is the slow stochastic. When the you get the fast crossing above the slow, then that's a sign of momentum to the upside. So that's great to see. But more importantly, too, the price action, the volume, it's under heavy accumulation. So it's one that I would certainly look to stick with. I like where you have your stop at the 113.5 level. Looks great. Yeah, and you did mention that you sold half already, so well done. Any other thoughts, comments, questions from anybody? If you are not already on our free newsletter, get on the free newsletter. You go to merrillwealth.com and you can hop on the newsletter where let me pull that up for you guys. That is right over here. Go to merrillwealth.com and you could sign up right here and uh, you'll even get a handout called the Trading Mind Decoder that'll help you start to unravel some of your mindset, some of your beliefs about trading. And that one's great, and I recommend it. So go to merrillwealth.com, get that. Okay, so looks like that is it for the questions. I'll give you guys another second or two while I take a sip of coffee. But I hope that this session and sessions like these are helpful for you. That's why I'm here. That's why I do them. If there's things that you would like to see that we haven't covered yet, go ahead and let me know. Reach out. I'm a pretty easy guy to find. You could type them into the comments on YouTube. You could find me on X or on StockTwits, Instagram, wherever you happen to be watching. You can even go to marrowolf.com, get on the newsletter, and then you've got the email. And then you could email me directly all the things that you would like to learn more about and see. There's a few people that I'm having active conversations with. So go do that. And that is it for today. So thanks for joining us. It's a pleasure, just like it always is. And I'll see you next time. Take care, much love, and God bless.